Welcome to Concept Craft. We are presenting step-by-step videos training to crack your certification exam, so you can gain the confidence to take on any accounting challenge. Now let's begin our today's lesson. Customer prepayments and deposits. Learning outcomes. In this lesson, we'll cover handling customer retainers in QuickBooks Online. Topics: methods for recording and tracking retainers. Using the deposit feature to record retainers. Creating a credit balance in accounts receivable to record retainers. Using the unearned income method to record retainers. Caution when using automatically apply credits. Tracking and used retainers. Be upfront with deposits. Many businesses ask for deposits before committing to major pieces of work or contracts to supply services. For instance, interior designers often make expensive purchases before starting their work. To cover these costs, they might ask their customers to make a deposit payment upfront. Businesses like these need a simple way to record these upfront payments in QuickBooks Online. How can QuickBooks Online help? Upfront payments like these are also called retainers, deposits, down payments, and other terms. For simplicity's sake, we'll use the term retainer. With QuickBooks Online, you and your clients can record retainers and then use them against future purchases. You can record them in several ways, depending on your needs. Methods for recording and tracking retainers. QuickBooks Online offers 3 ways to record retainers. To determine which method is best for a particular case, consider the following factors: whether financial statements are needed, for example, for investors; how often the client receives retainers and how much they are; how much time will pass between receiving the deposit and the work being done or products delivered; the total value of combined deposits at year-end. We'll cover how to carry out each method for recording retainers later in the lesson. First, here's a brief overview of the 3 methods. Select each heading to find out more. Using the deposit feature. Creating a credit balance in A/R. The unearned income method. Using the deposit feature. The deposit feature in QuickBooks Online allows clients to enter the deposit on an invoice. The body of the invoice lists the goods or services to be sold, and the deposit received is subtracted from it. This means that revenue is posted as of the date of the invoice, even though there likely hasn't been an exchange of goods or services. Note that this method doesn't conform to generally accepted accounting principles, GAAP, because it doesn't use an unearned income liability account. When should clients use this method? This method is best when clients only receive retainers occasionally. They can also use this method if there's a short time between the receipt of the deposit and the delivery of goods and services. Creating a credit balance in A/R. Clients can use the Receive Payment screen to enter a deposit without applying it to an invoice because the related invoice is not yet created. The result is a negative A/R balance. Note: ensure that your client's state doesn't require sales tax to be collected on the retainer. When should clients use this method? This option may work for jobs that are going to be finished quickly and within the same reporting period, or when the total retainers are negligible. It may also be used for businesses that only use reports for management purposes, rather than sending them to a third party. Additionally, this might be the easiest method for clients who enter their own transactions rather than having their accountant or bookkeeper do it. However, be aware that this method doesn't conform to generally accepted accounting principles because it doesn't involve an unearned income liability account. The unearned income method. This method tracks retainers to a customer deposits or client retainers, unearned income, liability account. When should clients use this method? This option is recommended for clients who need to provide financial statements to outside parties or for whom retainers are a normal course of business or a material amount. This method especially suits clients with large deposits held for extended periods, months or even years, cutting across several financial reporting periods. Using the deposit feature to record retainers. Let's see how to record a retainer using the deposit feature. Start by turning the deposit feature on. To do this, go to Account and Settings and select the Sales tab. Select anywhere in the Sales Form Contents section to enable editing. Use the Deposit slider to turn the feature on. Select Save and then Done. This adds a deposit field to invoices, so your clients can subtract a customer deposit from the total to calculate the balance due. Now let's record a retainer using this method. Create an invoice. Note that the invoice now has a deposit field between the total and balance due amounts. Populate the invoice with the necessary details and leave the sales price as non-taxable. In the deposit field, enter the amount of the deposit. QuickBooks Online calculates how much needs to be invoiced, taking into account the deposit and tax, if applicable. When a deposit is added to an invoice, QuickBooks Online adds a deposit to drop down above the product/service grid. Choose Undeposited Funds. Finally, select Save to see the details of the transaction. Select More and then Transaction Journal. The income is recorded based on the products and services entered in the grid of the invoice, and the retainer is posted to undeposited funds. Any remaining balance due on the invoice is posted to accounts receivable. Creating a credit balance in accounts receivable to record retainers. Now let's look at how to record a retainer by creating a credit balance in accounts receivable and applying it to an invoice later. With this method, it's best to turn off the Automatically Apply Credits option so that credits aren't applied to the wrong invoice. The first step is to record the retainer via receive payment, creating a credit in the customer's account, in other words, a negative amount in accounts receivable. Select Plus New, then Receive Payment. Select the customer. Note that QuickBooks Online shows an alert that the customer doesn't have an open invoice. This receive payment transaction shouldn't be applied against any open invoices, even if there are some that exist already. If the customer has any open invoices, don't select any of them, because this deposit is for a new job not yet invoiced. Enter the details of the retainer as you'd normally do. Then select Save and Close. Because no invoice was selected, a pop-up appears saying that the payment will be saved as a credit. Confirm this by selecting Save as Credit. That's it. The retainer is now recorded. Let's see how to apply this retainer to an invoice later. Create an invoice. Populate the invoice with the necessary details. When done, select Save. Once saved, select Receive Payment from the invoice on the Receive Payment screen. The invoice and the unapplied payment are both checked. To apply the retainer to the open invoice, change the amount in the Amount Received field to 0, then enter the amount of the retainer to the payment column of the invoice row. Finally, select Save and Close. At period end, create a journal entry to reclassify the credit balance for retainers from accounts receivable to an unearned income liability account. To do this, create a journal entry. Enter accounts receivable for the account. Add the amount of the retainers as debits. Add a description and a name to the journal entry because it's necessary to assign a customer when using accounts receivable in a journal entry. You may want to set up a customer called a/r adjustment and use that on the journal entry rather than entering a line for each retainer. In this case, we add the customer. To offset the retainer, in the next line choose an unearned income for the account column. Assign the same customer in the name column. Then select Save and Close. Using the unearned income method to record retainers. Finally, let's look at how to use the unearned income to record retainers. To do this, create a service item for the retainer, then create a credit memo for the amount of the retainer you want to apply to each invoice. If the client wants to show the customer how much of the retainer was applied to work completed, and how much is still unused, they can create a statement for the customer. Again, automatically apply credits should be turned off here. Select each step to see how to do it. Step 1. Create a new liability account. First, create a new liability account. Open the chart of accounts and select New. Select other current liabilities for both the account type and the detail type. Enter a name. In this case, it's Client Retainers. Select Save and Close. Step 2. Create a new service item. Next, create a new service item. Go to the Products and Services list. Select New and choose Service. Enter the name. In this case, it's Client Retainers. From the Income Account drop-down, select the Client Retainers Liability Account. In the Sales Tax category drop-down, select Non-Taxable. Typically, retainers are non-taxable, but check with your state. Then, select Save and Close. Step 3. Create a sales receipt to record customer payment of the retainer. Create a sales receipt to record the retainer received from the customer. Create a sales receipt. For the Product/Service column, enter Client Retainers. Enter 1 as the QTY and add the amount of the retainer in the Rate column. In the message displayed on statement box, enter the reason for the retainer. Then, select Save. Step 4. Create an invoice for the services carried out. When it's time, create an invoice for the services carried out. Create an invoice. Populate the invoice with the necessary fields and enter the total value of the service before tax. To add clarity to the customer statement, enter a description of the services carried out in the message on statement box. Then select Save. Step 5. Create a credit memo for the amount of the retainer to apply. At this point, the customer still owes the full amount of the invoice, so the next step is to create a credit memo for the amount of the retainer to apply to this invoice. Create a credit memo. Make sure the credit memo date is the same date as the invoice. For the product/service column, enter client retainers. Enter 1 as the QTY and add the amount of the retainer in the rate column. In the message displayed on statement box, enter a note about the retainer. Then select Save and close. This transaction decreases the balance in the client retainer's liability account. Step 6. Apply the credit memo to the invoice. Next, apply the credit memo to the invoice. To do this, select Plus New, then Receive Payment. Enter the customer and make sure the payment date is the same as the date on the invoice and the credit memo. Note that QuickBooks Online automatically checks the credit memo and applies the value of the credit memo against the open invoice. Select Save and close. The invoice now shows that QuickBooks Online applied the retainer and reduced the balance due. Step 7. Create a statement for the customer. Clients can create a statement for the customer, showing them how much of the retainer has been applied, what it was used for, and how much of the retainer is left. For the statement type, select Balance Forward. Typically, statements are sent out at the end of the month, so enter the statement date and the start and end date. Make sure only to select the relevant customer from the list of recipients. Select Print or Preview to see the finished statement. The statement very clearly shows the path of the transactions. Because a message has been added to each transaction, the customer can see the retainer received, the total amount of work done, and the amount of the retainer applied. Pro Advisor Tip: if your client doesn't need to show the details of the various transactions on a statement, they could enter the retainer as a negative line on the invoice they want it to apply to. However, this method isn't as transparent. For example, a statement won't show them the total amount charged for the work done. You need to work with your client to see which workflow works best for them. Either way, with this option, they are using a liability account. Caution when using automatically apply credits. You likely noticed the recommendation to turn off the automatically apply credits option in the Advanced tab in Account and Settings before carrying out the tasks described above. Why is this? The automatically apply credits setting can be handy, but if you keep it enabled, QuickBooks Online may record the payment to the wrong invoice, especially if your client has several open invoices for a customer. Tracking and used retainers. The unearned income method records the liability, which is in accordance with generally accepted accounting principles, GAAP. However, the client needs to proactively watch this liability account to see the open balances by customer. You can help your client by creating a report to track those open balances as follows. Open a balance sheet and look for the client retainers account. Select the balance on the client retainers account to open a detailed report. Customize the report as follows. Change the dates to all dates. Under rows/columns, choose to group by customer. Also, select Change Columns and remove any unnecessary columns. Under Filter, select the Cleared filter and choose Uncleared in the drop-down. Under Header/Footer, change the report title to Client Retainers. Run the report. Save the customization, so you don't have to recreate the report each time you or your client wants to look at open balances. There is one more step to make this report effective. At the moment, this report shows all retainers, even those with a zero balance. To get the report to show just open retainers, reconcile the account on a regular basis. To do this, select Accounting in the left-hand navigation, then Reconcile. In the Account drop-down, select Client Retainers. The beginning balance should be $0. For the ending balance, enter $0 regardless of the balance on the balance sheet for this account. Enter the reconciliation ending date, typically done monthly, so enter the last day of the month. Select Start Reconciling. Select the Pay header to sort by pay. Mark any retainers that have been fully used, i.e., the full amount of the retainer has been applied, as cleared. One half will show in the payment column and the other half in the charge column. When all the fully used client retainers are cleared, and the difference is 0, select Finish Now. Note: only do this when the difference is 0. Because you customize the client retainer report by adding a filter for uncleared status, when you run the customized report, it will only show open retainers. Summing up. Learning outcomes. In this lesson, we covered handling customer retainers in QuickBooks Online. Knowledge recap. You can now help clients record retainers from their customers and apply them to invoices. There are 3 ways to set up and record client retainers, so when recommending a workflow, it's important to consider criteria such as how frequently your client uses retainers and whether they need to send financial statements to outside parties. Next steps. In the next lesson, we'll look at daily sales summaries.